Okay, welcome everybody. Today we will be doing a presentation about pitching to an investor as an early stage founder. Who am I? I'm Jeffrey Brewer. I've set up about 7 businesses on 3 continents. I helped about 160, 170 entrepreneurs validate and build their businesses. I also am co-director of the Founder Institute in Hong Kong. I also teach at HKU, Entrepreneurship at the Biomedical Science Department. I'm an aspiring angel investor, and I've reviewed through all my working life over 1,000 pitch decks. Currently, I'm working with early stage founders for their funding and their merger and acquisition questions. So, some items discussed in the talk is type of pitching, who is your audience, and things beside a pitch, which is interesting, what you should do when you're about to reaching out to investors. But first of all, of course, always the first question is, do I need outside money? That's always the first question that you should ask. This is not an easy question, because some people think as soon as I have investment, all my worries will go away. Actually, at that point, all your worries will start. You're starting to spend other people's money, and they want something in return from that. So some people think raising money is winning the lottery. It is definitely not. So always ask yourself, do I need outside money? So your vision there is very important. What do you want to achieve? But if you do, then at that point, have a solid foundation. That solid foundation is a lot of upfront desk research, a lot of pre-preparation. The actual pitch is only quite often 10%. The preparation goes also at that point mostly into the business model canvas. I will get back to that a little bit later, but if you do it well and if you have a good business model canvas, which is not a static document, by the way, that's something that will evolve over time, but most of the information that you're getting for your pitch will come from your business model canvas. So that's a very good thing to have and to keep up to date and work with that. So today I'm going to talk about pitching, and we'll also talk about a teaser. What is a teaser and how should you use it? Then we also talk about a presentation deck. What is a presentation deck? And then we also talk about what's a reading deck, because there's a significant difference between those two. You can prepare yourself everywhere, wherever you want. You can go over the basics, and the basics is the things that you have to do before you even start. Also, one of the things that I really want to let you know is that not every pitch is worth spending time on. We'll get back to that a little bit later, but keep that in mind. So, first question always when you pitch or give a presentation or whatever you're talking to somebody, for whom am I talking? That's very important. Know your audience. Your audience is so important. And that's what quite often about 30% of your research goes into. Who am I talking to? How do I know? I know because I pitched this room. I flew to Shanghai, pitched this room, and the response from that room was 0. Because according to the organizers, this was a room full of investors. Actually, it wasn't. It was a room full of fellow startup entrepreneurs or people who are interested in startups or was working in a service provider to startups. So always ask yourself why. Why am I pitching? It's very important. Quite often people forget to ask that question before they even start pitching. So quickly over the types of pitching that there are. First of all, you have an elevator pitch. Then you have competition pitching. Then you have a product showcase. And then you have a fundraise pitch. Overall, a few things that you should keep in mind when you're pitching. First of all, display confidence. It's very important. You are the industry expert. You are the person who knows everything about your company. So no need to be insecure. Display confidence. It's very important. It really gets you further along down the road. Never say sorry. Quite often I see people, they make a little bit mistake. They say sorry. That really messes up your flow. It really starts in the back of your mind, messing up your flow. People saying like, hey, why is the person saying sorry for? And also at that point, quite often, people don't know what you're going to talk anyway. So if you forget to mention something, then at that point, don't say at the end, oh, sorry, I also forgot to mention this. The people didn't know what you were planning to say anyway. So don't worry about that. Also avoid saying, we're the only one, we're the best one, we're the first one, because quite often you're not. Quite often what you're doing or what you're presenting at that point has already been done before. Maybe not recent time, maybe before, like online e-commerce was done in the 90s already, but only took off 10, 15 years later. Yeah, so it's not always that you're the only one or the best one or the first one. Also try to avoid saying a 1 or 10 billion market, because if that 10 billion market will be on your doorstep tomorrow, you have a problem because you cannot scale up that quickly. And always have a call to action, a CTA. That call to action, usually at the end of your presentation, could be, I don't know, invest in me. Could also be apply for a job with us, or become a customer, or sign up for our emailing list. But always have a call to action. Quite often I'm in a room, somebody gives a presentation, and then the presentation like, okay, but what do you want me to do right now? Also have an escape. What if there are some technical problems? What if something goes wrong? Always have a little bit of escape. That could be either prepare your pitch without a deck, so at that point you can give the presentation without a deck, or have a little anecdote. A little anecdote that you can tell while the technical people are trying to solve your problem. At that point you're not standing there waiting for the technical people to solve your problem. Yeah, it gives a technical person also a little bit more space, a little bit less stress to help you out, especially when you're on stage. Quite a little anecdote that you can have, little story. Doesn't have to be happening that morning, but maybe at that point something that happened early in your life. You say, you know what happened to me this morning? And then have that. And always have a callback. If there's something you really want to drive home for the people in the audience to take away from your talk, it should be that. It should be that callback. So something that you really want to drive home. So now to the first type of pitch, an elevator pitch. An elevator pitch, how much time do you have to do that? As much as possible. So do your elevator pitch everywhere. Do it in your elevator when you're leaving home and you go down. When you arrive in the office and there are people in the actual elevator that don't know you yet. Do it in the shops. Do it in the local coffee shop. For your friends, your family, whatever. It's something that you have to do almost, and it has to be fluent, and it has to be something that you do. I should be able to wake you up at 3 a.m. at night and say elevator pitch now, and then it should come out fluently. What is an elevator pitch? It's an introduction. It's not telling your life journey. Quite often, especially at events, and at the end of the event, there's a little networking session, and then earlier one of the speakers was an investor, and then that guy is standing in the corner, and then 5, 6, 7 people are standing around him that want to talk to that investor, he or she. Yeah. At that point, quite often, there's that one person in front of you that's already talking for 4, 5, 6, 7 minutes. And you already see the investor, she's already looking around like, where's the toilet here? Because I'm getting a little bit bored of this person. Yeah. So I always say, don't become an investor hugger. Yeah. Do your elevator pitch to a person like that, and you can at that point, for instance, use the 3-step rocket. The 3-step rocket is an elevator pitch divided in 3 different significant different steps. The first step is 10 seconds. The second step is 20 seconds, and the third step is 30 seconds. Combined 1 minute. 1 minute presentation. Step 1, we are X and we do Y for Z. This is not a template for everybody, but this is what is a way to do this. For one of my previous startups, for instance, we are surrounded, we enable Chinese social media for people who cannot read Chinese. So the we are X, we do Y for Z. The we are X, we do Y for Z. How do we got there? How do we get there? It took me weeks to get to this one sentence to be very clear about what we're doing. In hindsight, very obvious, but to get there, it takes time. We got that from most of that information from the business model canvas. This is the business model canvas, and what you see here is quickly filled in the business model canvas for Surround App. Software development, follow Chinese social media, it was a mobile app, people who cannot read Chinese was the customer segment. It is a trigger to step out of that elevator and to ask for more. So if you do that first step, the 10-second step, you look at the person, you give a little pause, and then you leave it up to the person to either not react or to say, I'm not interested, because maybe we were in social media, maybe that person was in IoT. Yeah. So at that point, like, I'm not interested, but thank you very much. If that person shows any sign of interesting, then at that point you can go to the second step. And the second step is a 20 seconds. How do we do that? So for us in that case is you will able to load your Sino Weibo timeline in our app, have a machine translation from Chinese to English. So that's not perfect, but at least you know a little bit about what the post is about, and quite often with the pictures of the post together, you could put one-on-one together. If at that point was not possible, then at that point we would allow you to have a human interpretation, human translation for that. So that's your 20 seconds. How do you do it? After that, you stop again. You look at the person. Is this still okay? Yes. Then you go to step 3. Step 3 is your current market, who's your team, and maybe other additional information. And then at that point, you exchange name cards. And that's it. Don't become that investor hugger. Exchange name card and say, let me call you tomorrow. Or let me send you an email tomorrow. And do follow up. Because quite often, if they're interested, they will remember. And if you at that point follow up a week later or don't ever follow up, they will remember. Also at that point, if somebody says, I'm not interested, do you know somebody else who might be? Because a warm intro brings you way further than all the desk research that you can do. Second type of pitching, competition pitching. How many times should you do that? As least as possible, as less as possible. Because You have to stay away from startup entertainment. Quite often, competition pitching is startup entertainment. The only winner there is the organizer. Sometimes the winning prize on a competition is, I don't know, $1,000 US, $2,000 US, $3,000 US. That's not even enough to pay a developer for 1 month. And you're working on that pitch probably at least an evening, and then I'm not talking about the preparing the pitch yet. Also, at that point, usually there's only one prize. That means that there are maybe 4, 5, 6, maybe even 10 startups not winning that prize. So the chances that that will be very good use of your time is very slim. So don't become a performing seal. Don't work on the KPIs of the organizer. But if you really want to work on your ego, or you want to practice public speaking, then at that point your competition pitching should be a product showcase. Just talk about your product as if you're showcasing it, as if you're doing a sales on your product. Because quite often a product showcase is in front of your target audience. And quite often a competition pitch is not for your target audience. Competition pitching is usually at that point in front of a group of fellow entrepreneurs or fellow startup people. Yeah. The fourth type is fundraising. Fundraising, how many times do you have to do that as a pitch? As much as it takes, until your round is full and done and over with. These are usually not, as an early stage founder, the people that you're going to take investment from. Yeah. Maybe the guy with the red socks, but probably not. These are usually more the type of investors that you will be engaging with as an early stage founder for your first, second, or third round. When you're looking for founders, then at that point, this Venn diagram is very important. The size of the check, the domain of the investor, what they're usually investing in, and the location. The size of the check. There are investors that only doing check sizes 10 million US dollar or more, or maybe even $1 million US dollar or more. If you're raising 500,000, they will not be able to entertain you because their due diligence will be exactly the same and their return on investment will not be enough to justify their time. Yeah, so check size, very important. Also, the domain. Like if you're talking to an IoT investor and you're doing something not IoT related but in mental health, small chance that that investor can invest in you. Especially when they're professional investors, they have their mandate. They have their, for instance, VC investor, they have their thesis. They're saying we are investing in XYZ. So at that point, they will not be able to diverge from that. Location now, in this current day and age, is a little bit different, especially during this COVID situation. Normally, I would say an investor is looking to have their product portfolio within a 1 or 2 hour travel time. I talked to 5 investors and all of them said no. What should I do? 5 is nothing. For instance, Buffer. Buffer is a social media company that will allow you to spread out your social media posts over a certain period of time. They did, after they were already profitable, they had a viable business, they had staff, they were profitable, what I said, and they were, at that point, had an office in Silicon Valley. They started reaching out to 200 investors. 200. Keep in mind, this is a company that has revenue coming in. This is a company that has staff. This is a company that already proven their business model. And they had still have a very good branding. From that 200 investors outreach, they got 50 meetings. And from that 50 meetings, they got 80 investors. And some of you will now say, that's a lot. Yes, that's correct. Quite often 50 meetings, I don't know, might bring you 5 investors. And that's normal. So your funnel has to be very big. So how do you get to those 200 investors' contact details to reach out? First of all, what I already said earlier, if somebody is not interested as an investor, ask them who do you know who might be. But also at that point, your desk research. That's about 30%. Prepare. See what kind of, if you have any competitors, what kind of, or what type of investors do they have? Find similar investors to that. There are online resources like AngelList and Crunchbase and that kind of websites that have a lot of investor information on there. Quickly, the type of stages there are in investing, and also there, this can be different on location, it can be different on stages, but overall, first of all, idea stage is the FFF phase. The friends, family, and fools. So your uncle, your parents, maybe some friends, and maybe some fools that know you from previous work. And they say like, hey, here's some money. I believe who you are and that you can make this work. So this is the FFF phase, the idea stage. You just have an idea, you want to work on that. Next stage, getting to traction, getting product market fit. That's usually at that point an angel investor or angel investor groups. After that, when you go to revenue, then you have the seed investing. From that, you're going to growth, Series A, and after that you have Series B to the whole alphabet and even beyond that. For an angel investor, at that point, almost everything goes. Angel investors, some angel investors have thesis, some are not. Some of them do bigger industry investments, but quite often there everything goes. It could be even a service provider of you that says, hey, can I also put in some money into what you're currently doing. A venture capitalist reach out, panic, they want to invest in me. No, that's not always true. A VC can reach out just to do market research, just to test the waters. Yeah? Quite often, if you're mentioned somewhere in an article, like the 5 to 10 startups to look out for in 2021 or 2022, quite often at that point you might be getting some interest from an investor reaching out to you. Test pitch to investors that you actually don't want. Practice, very important. Don't go to the one investor that you want the investment with. Of course, there are examples that worked, but quite often, in general speaking, just test your pitch from investors, get their feedback, reiterate on your pitch deck and on your story that you're pitching with that feedback, and then go to the people you really want the money from. Quickly, how does a VC work? A VC, a venture capitalist, quite often has a different structure than, for instance, an angel investor. A VC, in my point of view, is an organization where the people who are running it are depending on the return on investment to put their daughter to college. So I'm quite often not talking about family offices or other structures, but a VC where the general partner, the GP, depending on the return on investments to pay the bills. That GP has limited partners. Those limited partners are the people who are putting money into a fund. It could be 3, 4, that could be more, could be 15, depending on the size of the fund. But those are the people who put money into the fund and basically saying to the GP, here's my money, I believe in you, you invest it and make that grow. Usually at that point in a VC office, there is an associate and sometimes also venture partners in that office. They could be your advocate. They can be doing research. Don't write them off. Like an associate, quite often I hear like, I only want to talk to the general partner, or the general partner is the only person who's making the investment decision. Yes, that's true. But the associate or a venture partner can really become your advocate. Can really say, hey, I like this company, I like these founders, I like this team. GP, really have a look at this. So don't discard them. They quite often at that point make an investment memo. Yeah? They write an investment memo on you. So they have to do some due diligence, they have to get some additional information from you. And with that investment memo, together with the general partner, they make a decision if they want to invest in you or not. Usually at that point, the platform, how it's being done, that's usually at that point not a real issue. Quite often now it's through a video conference. In the past, a lot of face-to-face. The only thing that you have to be very sure of is be on time and be prepared. An investor quite often has multiple meetings in a day and he's not there to wait for you even 5 or 6 minutes. Yeah. But if it's online, keep in mind these kind of things. Background noise. Yeah. Don't go and do this from a coffee shop. Have a good microphone. Quite often the microphone in your laptop is not a good microphone. So buy a good USB microphone, connect it to your laptop and have that in front of you. And test it. Test your online. Have a friend share online joining you before you even start pitching an investor and test it. How do you share a screen? How do you share a video that you want to hear? Is sound coming over if you want to share a video? Next up is a teaser. A teaser, what's a teaser? A teaser is a 1 or 2 page PDF to email to a connector or an investor. Quite often at that point, you might know somebody who knows a great investor. At that point, you don't want to share everything on your pitch deck or on your reading deck with that person who's in between. Then just make a 1 or 2 page PDF which has all the information, which is quite often at that point public anyway, and send that to the connector, and then the connector can send that to the investor. And then based upon that, the investor can make a decision to reach out to you and make an appointment. It's also something that you can just cold email to an investor and say, hey, are you interested? This is, for instance, a one-pager that I found on the internet. This is a little bit how that looks like. Some infographics on there, some information about the team, etc. Then, of course, you have the presentation deck. The presentation deck is usually visually attractive. Yeah? It also means a minimal font size of 30 points. A little bit like this. Not a lot of text, just more for you as a reminder what to talk about when you're presenting, because the attention should be at you, not at your slide. Yeah? So you are the one communicating, not your slide. Could be quickly one hero image, one quick sentence, but it's more at that point that you get the intention, and it's more for you to remember what you're talking about. And then you have the reading deck. What's the reading deck? That's quite often your presentation deck plus a lot of data. Something you can, at that point, after you already have a meeting or a plan with an investor, or the investor says, hey, can you send me some more information? Send them your reading deck. Something that is explanatory without you present explaining everything. Yeah? So that has a lot of data. Meetings with an investor is almost always a one-on-one. Across the table, across a video call, but one-on-one. And you share data. If it's a good investor, you already read your deck, so you don't have to present at that point your company. He already should know what you're doing because he invited you. So the content of a deck should be the company purpose. Why are you here? What are you doing? A problem, the problem statement, and your solution to it. Also at that point, why now? Competition, alternatives. An alternative could even be a piece of paper. An alternative could be, I don't know, a Word document or a spreadsheet. And your market potential. The thumb, sum, sum. What's the thumb, sum, sum? It's just an example, but the total available market, your serviceable available market, and your serviceable obtainable market. You can Google that, find out what's the right one for you. More content. Your business model. And that's not only about how you're going to make money, but also how you're going to do distribution. Your team. Why are you and your team the best people to make this work? Also, financials. Do you already have revenue coming in? Do you already have a runway? Also at that point, traction. What kind of traction do you have? How many users do you have? There are a lot of KPIs that you can find or should have already that will show your traction. Churn, all the things. Also at that point, the vision. What do you see in 5 years from now? Because quite often, and as an example that I take, yeah, you have SpaceX, Elon Musk, right, with his rockets. But that's just a tool for him, because his vision is going to Mars. Always have an ask, a call to action, and always say, where are you going to spend the money on if you're raising money? What I said, team is very important, especially for early stage. Yeah? Because it's easier to fix a broken product than a broken team. So remember, for whom am I pitching? Why am I pitching? Show traction. Very important. Where are you in your journey? I've seen people pitch and out of, oh, this is just an idea. And then in the Q&A, I had to ask them like, hey, where are you in your journey? And then at that point go, oh, we already have 15 paying customers and we launched 3 weeks ago. And of course, indeed, team, and not every pitch is worth spending time on. And yes, that was the callback that I mentioned earlier. Here are some books that I find very interesting and very good to read as an early stage entrepreneur. You can find me on LinkedIn or on Twitter at Jabbery. If you add me to LinkedIn, please write a little introduction. Thank you very much for your attention and hope to see you out there.